Good morning for this Wednesday, May 8th. And like I said yesterday, take a look at this market, just extremely strong. And like what I pointed out yesterday was, and I made a mistake, I said Friday it gapped from Friday to Monday. I'm wrong. It was from Thursday the 2nd of May, till Friday the 3rd of May, the market gapped. And we have not looked back. So for those of you that are listening that are students of my E-mini success formula, what I teach for day trading is when the market gaps in one direction and continues to move in that same direction without even attempting to fill that gap, that tells you the market's going to continue moving in that direction. And that's what we've seen. Look at this. We've got 4 consecutive days now with higher highs and higher lows, today being the 4th, right? So again, the market gapped from Thursday to Friday, didn't even attempt to fill that gap, and once we took out the high of that gap day, which was Friday, we took it out on Monday, we knew the market was going higher. So the way you can play that is directly, obviously, in the futures market if you want to do that, or if you trade your IRA or some type of retirement account. What I suggest is trade the SSO. SSO is the 2 times ETF, right? The 2 times the general market, the S&P. So look at this is the E-mini chart, and that's the SSO chart, right? Identical, right? E-mini, SSO. It's identical, so you can play it this way. Okay. Of course, if you think the market's going to go down in price, the inverse funds would be SDS. As the general market goes up, the SDS goes down. So if you think the market's going to go down in price, you would buy into the SDS, which will go down. Or, of course, what I mentioned is the fear index, VXX. Again, that's another way to play the downside. So you buy the VXX. When the market goes down, the VIX will go up in price, okay? So let's take a look at a couple of the stocks that have been on my radar. 2 of the stocks that I told you a few days ago I thought would continue moving higher with the general market. One was Baidu, and that was down in here, thinking, the market was testing these lows. And since the market's making new highs and Baidu's down, I thought that the Baidu would start moving higher, and it has. We've made about a 6-point move since I started mentioning that. Another one was a pharmaceutical company, ONXX. ONXX. Remember what I said was the market was coming, the market was down. So again, the general market's up, right? The general market is up big time. So we want to look at the stocks that are kind of down, that need to catch up, that will eventually catch up to the market, or at least bounce, because the overall market's up, right? 80% of stocks follow the general market, right? So, Baidu was down big time, okay? Testing these lows. It's due for some type of rally. We've gotten that. ONX, we've pulled down, right? This market made a high on April 23rd, and we were trading down. And look at where we got to, a magical level, a real strong support level, right? The 50 exponential moving average, right? The hot pink line is the 50 exponential. So I mentioned right in here that since the market's getting close to that 50 exponential, to be on the lookout, to be looking to buy this market. And so far, we're about 5 or 6 points on that one as well. Let's take a look at Netflix, okay? As you can see here, I've got a white horizontal line which represents this high and is real close to this high, right? So this was the high until we gapped higher on the 23rd of April. And now we're coming down off those highs, and we're getting close to this red mid-band, the mid-band. So look, in a strong uptrend, what you're looking to do is you're looking to buy weakness down into support. And so Netflix is trading down. I'm hoping this market can trade down to, between the mid to the lower band, which, remember, old resistance, once broken, turns into support, right? So this high here of 197.62 should hold as support, okay? So we can take it a step further and measure the fib retracements from this low up to this high. Okay, so essentially what we did was we measured from April 8th's low to April 24th's high. And as you can see, look at right here, the 38.2% retracement is on this white horizontal line, which also happens to fall right between the mid to the lower Kiltner channel band, which in a strong uptrend should act as support. Okay, so we've got a lot of confluence here. And again, confluence simply means when there's a lot of different reasons to be buying the market as a support level. So like Fibonacci confluence simply means if you measure more than one set of fibs, right, from a low to a high and another low to a high, and let's say you got the 38.2% retracement, that is maybe a 50% retracement of a smaller move, let's say. Okay, so what we have here is we've got old resistance that turns into support, which is this white horizontal line. We've got the 38.2% retracement sitting right in this level, right? And we've also got the fib level. So we got the fib 38.2 sitting here, old resistance that turns into support, and mid to lower band. So I'm saying anywhere from 200 down to 197 and change is a support level that you should be looking to pick up some Netflix. So I hope this was a useful video for you. Again, nothing really new in the general market. I mean, the general market is screaming higher. And I know there's a lot of people out there saying, hey man, this is real extended. It can't go much higher. It can't go much higher. Look, it is pretty extended, right? I would expect the market to, try to come down from these levels. It would be more healthy for the market to come down and rest and pause before making a move up. But you can't deny the fact the market's going higher. You've got to go with it. The market's making higher highs and higher lows. So if you look at this chart, this is the beginning of the year. Just like I'm saying now, look at the market gap from Thursday to Friday, and then we continued higher by making higher highs and higher lows. Look at the beginning of the year, the first trading day of the year, right? January 2nd, 2013. The market never attempted to try to fill that gap. From the last trading day of the year on December 31st, it gapped higher, the first trading day of the year. Never tried to fill that gap. Instead, it made a new high, and then it continued moving higher. Now, am I saying the same thing is going to do here because of this gap? I don't think, well, again, I don't know what's going to happen. Nobody knows what's going to happen. All I can say is the market continued charging higher, and I can guarantee you, even back here, people were saying the market can't move much higher. We're going to go lower. We're going to go lower. The market charged higher until we hit that high on February 19th. What do? The market came down for a normal correction. Now take a look at this. If you take a look at the fibs from the low of that gap up to the high, look at where the market traded down to. The market simply traded down to between the 50 and 61.8% retracement of that up move before resuming higher. Okay? So that's what I'm looking for the market to do in here. If the market comes down, I'm looking to buy this market. Right? Same thing here. Look at when the market topped out here. On April 11th, the market came down, and what did it do? It kissed that 50 exponential moving average while testing this low and this low. Could not break down through those lows at a support level. This is the same thing I'm doing up in here. Okay? So again, hope that helps. These are on my radar, these stocks. You should be looking to buy this market. Have a great day. Bye for now.